Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, and we're October 5th, 2020. Well, happy days are here again. Well, look at all the green. A lot of happy traders today. Two markets down, TLT and the yen, FXY. Everything else, all green. Interesting. Now, I've added a new commodity, by the way, to some of my charts now for my subscribers, OUSA. For those of you that look at Kevin Leary on CNBC, I know it's one of the ones that he looks at for high dividend yields. It's got a good following. I liked what I saw, so I've added that to the spectrum of everything that I do for my subscribers. So that takes us up to about 37 charts a day we're doing for the ETF spiders. So let's take a look at what we've got. As I said, everything was up, and you can see what we're doing. The market is euphoric over the idea that President Trump, who was taken to the hospital Friday after the markets, and of course we were lied to. We were told at first he didn't need any oxygen, and there were rumors he did. Then his doctors came out and said he did. Then we heard other stories. He's sicker than some people are saying. You never get quite the truth. He's right now on a helicopter as I'm talking to you, because I can see it behind me on our other monitors, flying to the White House. So obviously the cocktail they gave him is helping. Of course, he's not like us. He's going to be monitored a whole different way. But do you think you can keep him down during the election, the last 3 weeks? Forget it. It isn't in his makeup. This is his new career. He's going to fight for it. And the polls, they're not favoring him, but you have to understand the makeup of the polls. I was watching them. Obviously, Fox has one point of view, very Republican. Other stations, CNN, MSNBC, they're very Democratic, obviously. And you see the makeups are different. But you also see that those polled, it's 70-30 Democrat in some polls. 50-50 polls have the president in a real horse race. Who knows? We'll find out. Remember, they had him down and out in the last election, and now he's an incumbent. That gives you an edge, typically. All right. So as we look at the market, we're churning right here. You had a big update today. Big updates on a Monday, don't forget, are often met in the stock indices by a down day on a Tuesday. We're even higher again early tonight, so we'll see what that does. But when we look at this chart, you still have a pattern of higher lows and higher highs, bullish. To tell me that the market is losing that, you've got to take out 114.48, hitting 114.47. If you were to not hit 118.48 and you hit that number, I could have a pattern of lower highs, lower lows, but I don't. And I don't know that it's going to do that. So until it occurs, the trend is up on the swing line, and that's the caveat. Where's the support in the market? You know where it's at. Right at that 18-day average of closes. Admittedly, it's 114.45. The other day it was 114.40. You just missed it by 8 cents. Now you're back up. What you don't want to do is get down to it, because if you got down to it, you'd break that 114.48. So that's a number I'm not looking forward to seeing if the uptrend's going to continue. If it continues, where might it go? Back to where it failed before, the upper Bollinger Band. After a market hits it, makes a run at the 18-day average, it's like you reset a pinball machine. Tilts over, that's resistance one more time. What about momentum? Overbought. So, as bullish as traders are tonight, and I'm sure they are, I have a lot of reservation. Overbought market, upper Bollinger Band, Tuesday after a big rally. I am not bearish, but I got plenty of reservations. By the way, I have a dinner reservation tonight too. I will be leaving. As we look at this market, overbought into the upper Bollinger Band. You're fighting at it now. You've been at it 4 or 5 days in a row, as you can see, fighting at that band, but that's also called locking onto it. And if this market were to embed, and it's nowhere near it, you couldn't even do an embedding where both the red and the blue line are over 80 for at least 3 days in a row until the close of business Thursday and or Friday. I'd have to see which one. And you've got to get through the Fed minutes this week, which will be interesting. But all that aside, as a chartist, throw the name off the chart. You're in a resistance area. in an uptrend. I don't think the pros buy a Bollinger Band, and I don't think they buy overbought conditions. But there's nothing bearish on this chart. There's only bullish things, overbought though. In the industrial sector, there is no trend. You've got a market that had an outside day up on Friday, followed through today, and the pattern is one of a lower low and now a higher high. That is not a trend. The market's whipping day in and day out. At what number? Look at the 18-day average, and you've got 1, 2, 3, 4, 5, 6 days. Today you didn't hit it. So you had 5 days in a row of hitting it. Today you broke away from it. If the market decides to rally, you tell me what number you would think that I'd say the resistance will be at. And I'd say you're right, 80.09. Where would I say the support should be found? 77.46. Are we trending? No. You have the bias up and momentum up. In XLE, the energy sector, you lost the embedded reading. When that occurs, you have the time in the last 5 minutes or so to take a look. I teach traders that, hey, when that happens, why are you hanging around? Especially if the reading isn't just over 20, and it's not. 22.46 was more than that. Now, that doesn't mean anything other than coming out of shorts. If the market keeps that position when you reopen tomorrow morning and doesn't give it up much, I think you're going to see pro-buying of this market with stops under 28.20 to get up to 31.44. The key is in this market in that first half hour of trading to be lower, stay lower, and start dragging this back under 20. Otherwise, I think the pros getting a reversal in the market. QQQ has had a pattern of higher lows and higher highs. So the action today, interesting. We had on Friday, as you can see, and this is Friday's action, a big down day, today an up day. You haven't even challenged the Bollinger Band again, and you're already overbought. So am I enthusiastic to start buying here? No. An overbought condition to me is a filter that screams at me, you're not buying. Not everything fits in to your checklist. That's what it tells me. So, sideline. Doesn't mean that I don't see an uptrend, doesn't mean that I don't see that as a number, but I do tell you if you hit 273.44 and don't take out 282.08, as much as you're friendly here, you turn bearish. Instantly, possible projection down here. That's the number I don't want to see. In the emerging market ETF, I want to own this market because I really believe at the end of the day, the Chinas, the Indias, those are the places where the money's going to look to go. It negated a downtrend in the swing line today. So it's not bullish, but it's no longer bearish. And you're out of this correction that when you got to the 18-day average, you were falling back. Momentum up, bias up, no buy signal, but no more short signal. GLD, what number did it go to and stop? What do we call the line in the sand? I think we call it the 18-day average of closes. And when a market gets to a Bollinger Band, if it rallies sharply, it goes up to the nearest key moving average. In this case, it's the 18. The 100-day is here, the 200's here. And that's all you've done. Now, a close over 179.69 is friendly. You wouldn't want the prices back under 178.16. But the bear phase of the market had ended a while back when you got over this high, and now it's confirmed it with the swing line being higher highs, higher lows. And because of that pattern, you can't start a new downtrend even if you take out 178.16. So what the bulls are hoping is you can close over that 18-day average to get a run that goes further. In GDX, you still haven't even challenged the 18-day average. You ended your downtrend, and as I mentioned, when the market hit this number right here, I was telling you that I thought that the pros, those that buy key moving averages, light their candles and go, I'm going to hold this. I think I'm right, and I want to own it for a period of time. I think they bought the market here. And so far, they're still got those candles going and the market's coming up, and I'm looking for 40.26. Yes, there are people that trade that way. There is nothing wrong with it. There's nothing wrong with any method if it can get you a result, not a negative one. When we get over to TLT, I am the first guy that is surprised. This market kept coming down to the Bollinger Band. I had mentioned to you we have a sell signal in it, but how do you sell a Bollinger Band? It had lower highs, lower lows. You'd hit the objective. Will you break out of that? And I think I was just talking to you Friday about it, and I said, if you do, it's really a slap to the Fed. What are you going to do? They're challenging it, and wow. So now I'm looking for 159.03 to be, I'm going to cover my short area. First challenge of a 200-day average that you haven't been at in, God, months, many of them? Nah, that's where I think the people will yank in some of the shorts. But this was, I got you, to the guys that had all bet that interest rates are going to be low and lower going into the year end because the Fed's got the markets back. Didn't quite work out that way, and I'm proud to say my work certainly didn't get caught on something like that. In FXE, now you turn this market friendly again. Will it last is the big question. With today's action, you have higher lows and higher highs, and you settled over the 18-day average. So I see the trade trying to buy this market at that 18-day average. I think stops for them, the pros will probably be under 110.16. Why? Because if they're playing the pattern of higher lows, higher highs, and momentum as it's over this number, and stochastics up, they don't want to take out a most recent low. And that's this number. So that's what I think. Is there anything that I think could turn the chart bearish? No. I can see you coming out of the uptrend if you hit that number. I don't see the market turning bearish off that number. Should the market decide to really march on up, 112.14 is a potential target. So you put it all together, you try to come up with a game plan, and what I do for you is two parts. I put out first my morning subscriber video. I could actually say I put this video out first. This is 4 in the afternoon. So I put this out in the afternoon, my subscriber video for my SPDR ETFs. In the morning at 5:40, I'm already recording my futures video. And that is telling these traders that are in these SPDRs and ETFs what the futures are doing, what they're looking like, why. The reason is because SPY, DIY, I can go on and on, IWM, they're all depending on what these markets are doing. FXB, FXY, they're looking at it. TLT right in here, GLD, SLV. They're all looking at this and they're based on it. They're using the futures market in many ways for their base holdings. So you put the two together. You've got first my game plan as to what I see in the afternoon. It's verified or thrown out in the morning on the future side. That's the fun of having two of these go. I cover 40 futures charts. I'm covering the whole spectrum for you. And then, as you know, I'm covering all these marks. It had 34. I added another one today. Pick them up to 37 charts, so we'll redo that and show you all the different ones that we have on our other ad. The introductory price for both of them, absolutely inexpensive. 30 days worth, basically 50 cents, 60 cents a day, $16.90. Come on. And I publish on the weekend weekly ones. So unlike what you see on YouTube, I'm giving you the full spectrum. You're going to get all the weekly charts and all 37 of the ETFs, all of the futures on the 40, then the daily charts. You get an awful lot, plus access to my webinars for free, others pay to join them, and access to my special reports for free, which others pay for. Pretty good deal. So you might want to read about it. Go to www.iraepstein.com. Under the word research, it's all explained there, and you can sign up right on the website. I'm Ira. You have a good day.